Welcome to Finance Frontier, where finance meets the future. I'm Sophia, and with me is the ever-insightful Max Vanguard. Today we're broadcasting from the heart of innovation, New York City. Known for its iconic Wall Street and bustling financial district, New York is the perfect backdrop for our deep dive into the latest financial trends and AI advancements. Today's episode is titled, Finance Frontier. Live from the heart of innovation, New York City. Max, tell us what we have in store for our listeners today. And for those interested in both finance and AI, make sure to check out our mixed episode where we explore how these two worlds intersect.
Absolutely, Sophia. It's fantastic to be here in New York City, a city that epitomizes financial innovation and dynamic energy. In today's episode, we'll cover the latest U.S. consumer confidence trends and their impact on the economy, delve into how central banks are preparing for the profound impact of AI in finance, and explore a promising trade opportunity with Bit Digital Incorporated, BTBT. Stay with us as we break down these crucial stories and give you the insights you need to stay ahead in this fast-evolving financial landscape.
Before we dive in, we want to remind you to share this episode on Twitter and help us spread the word. You can find the link to our Twitter profile in the show notes. And if you haven't already, make sure to subscribe to Finance Frontier on Apple Podcasts or Spotify to stay updated with our latest episodes. Your subscription helps us climb the charts and reach more listeners. Hit that share button, and let's make this conversation go viral. Welcome back to Finance Frontier. Today we have a thrilling lineup of the latest finance news, coming to you from New York City. This place is known for its vibrant tech scene and innovative spirit, making it the perfect backdrop for our discussion. Let's dive right into it. Let's start with the latest on U.S. consumer confidence.
Indeed. Recent data shows a decline in U.S. consumer confidence due to a muted outlook for business conditions, the job market, and incomes. According to a report from Yahoo Finance, consumer confidence has dropped, reflecting concerns about future economic stability. This decline could have several implications, including reduced consumer spending, which is a critical driver of economic growth. When people are less confident about their financial future, they tend to cut back on spending, which can slow down economic momentum.
That's quite concerning. How might this impact different sectors of the economy?
Lower consumer confidence typically affects sectors like retail, hospitality, and automotive the most, as these rely heavily on discretionary spending. Businesses in these industries may see reduced sales, leading to potential cutbacks in hiring or investment. Moreover, the job market might experience slower growth as companies become more cautious about expanding their workforce amidst uncertain economic conditions.
In market news, we see mixed trading as Nvidia makes a cautious comeback after a recent sell-off, lifting the Nasdaq.
That's right. Nvidia, after experiencing a significant sell-off, has managed to turn a corner, which helped lift the Nasdaq. This recovery was particularly notable as it brought some much-needed optimism to the tech sector. According to Yahoo Finance, Nvidia's resurgence has been a crucial factor in boosting investor sentiment. Additionally, a surge in tech stocks, led by Nvidia and FedEx, has significantly boosted the U.S. stock market. FedEx shares, in particular, jumped 15% in after-hours trading, showcasing strong market performance in the tech and logistics sectors.
It seems like tech stocks are playing a crucial role in the market's overall performance.
Absolutely. Tech stocks have been a major driving force behind the market's resilience. Another interesting development is the dip in oil prices by 1%, which was driven by weak U.S. consumer confidence data. This dip raises concerns about the economic outlook and fuel demand. Meanwhile, U.S. house prices have increased steadily in April, despite higher borrowing costs, according to the Federal Housing Finance Agency. This steady rise in house prices suggests that demand for housing remains robust, although higher interest rates may eventually slow this momentum.
It's fascinating to see how different factors are influencing the market. What are your thoughts on the overall market trends?
The market is currently navigating through a mix of positive and negative signals. On one hand, the recovery of major tech stocks and steady house prices indicate underlying strength in the economy. On the other hand, declining consumer confidence and the impact of higher borrowing costs pose challenges. Investors are closely watching these developments to gauge the future direction of the market.
Next, let's highlight some significant reports and initiatives. Yahoo has released its fourth annual report on the state of automation in finance, which provides key trends and insights into the future of financial automation.
Yes, the report by Yahoo highlights how automation is transforming the finance sector. Key trends include increased adoption of AI and machine learning to streamline financial processes, reduce errors, and enhance decision-making. This shift towards automation is driven by the need for greater efficiency and accuracy in financial operations. Businesses are increasingly leveraging these technologies to gain a competitive edge and improve their financial performance.
That's impressive. What are some of the key takeaways from the report?
One of the main takeaways is that automation is no longer just a trend, but a necessity for staying competitive in the finance industry. The report emphasizes the importance of integrating advanced technologies to handle repetitive tasks, allowing human workers to focus on more strategic activities. Additionally, the report highlights the growing role of cloud-based solutions in facilitating automation and enhancing data security.
Let's move on to the launch of a new litigation finance firm in the U.S., with over $100 million in capital. This seems like a significant development.
Indeed, it is. The launch of this new litigation finance firm, as reported by Australasian Lawyer, marks a major milestone in the legal tech space. The firm focuses on commercial and patent litigation, providing substantial financial backing to legal cases. With over $100 million in capital, the firm aims to support innovative legal strategies and ensure access to justice for businesses and individuals involved in complex litigation. This development underscores the increasing intersection of finance and legal technology, driving innovation and efficiency in the legal industry.
Finally, let's touch on the U.S.'s pledge to be a leader in climate finance while defending gas expansion. What are the key points here?
John Podesta, Biden's top climate official, has called for major economies to aid poorer nations in combating climate change, while also defending the U.S.'s gas expansion efforts. According to The Guardian, this dual approach aims to balance the need for economic growth with environmental sustainability. The U.S. pledges to lead in climate finance by providing significant funding and support for green initiatives globally. At the same time, the U.S. is promoting natural gas as a transitional energy source, which can help reduce carbon emissions compared to coal and oil.
That's a complex but important balance to strike. It's clear that the U.S. is trying to navigate both economic and environmental priorities. Welcome to Chapter 2 of our podcast, where we delve into practical strategies for trading and investing. Today, we'll analyze a promising trade opportunity with Bit Digital Incorporated, BTBT. Let's get started. Let's kick things off with Bit Digital Incorporated, a company making waves in the digital asset and AI sectors. Max, can you give us a breakdown of BTBT's current financial performance?
Absolutely. Currently, BTBT is trading at $3.42 with a price target of $5.19, based on technical resistance and new contract information. The stop loss is set at $2.79, and the stock has a P/E ratio of 8, indicating it's undervalued relative to its growth prospects. The risk-reward ratio is excellent at 2.81 to 1, making it a compelling opportunity for investors.
What recent developments have contributed to this positive outlook?
Recently, BTBT finalized a significant contract expansion with a major high-performance computing (HPC) customer, increasing the total contract value to approximately $275 million. This expansion is substantial, given the company's market cap of $411 million. Additionally, BTBT reported an EPS surprise of 3,340% last quarter, significantly beating expectations and showcasing robust financial performance.
Those are impressive numbers. What do the technical indicators tell us?
Technically, BTBT is showing strong bullish signs. The breakout level is at $2.94, with significant volume almost 5x the average of the last 30 days, indicating strong buying interest. The stock is trading above key moving averages, including the 10 EMA, $2.76, 20 EMA, $2.80, and 50 EMA, further reinforcing the bullish trend. Support levels are at $2.94 and $2.89, suggesting strong price support around these levels.
With such positive technical and financial indicators, what's the investment thesis here?
BTBT presents a solid long-term growth potential due to its strategic contract expansion and impressive EPS performance. Its valuation, with a P/E ratio of 8, appears undervalued given its growth prospects. The technical strength, particularly the breakout above $2.94 with strong volume, suggests potential for further upside.
How should investors manage their risk with this trade?
Risk management is crucial. Setting a stop loss at $2.79, just below the 10 EMA, helps manage downside risk while allowing the trade to stay within natural price fluctuations. Additionally, adjusting position size based on daily ATR %, 10%, can help manage risk. For example, buying only 1/4 of the full size when the stock moves for X ATR % in a day can limit exposure to volatility.
To recap, BTBT offers a promising trade opportunity with strong financial performance and bullish technical indicators. The recommended stop loss for BTBT is $2.79, and careful position sizing is essential. Always perform your own research and manage risks carefully in both trading and investing. Welcome to Chapter 3 of our Finance series. Today we're diving into options and futures, two powerful financial instruments that can be used to hedge risk or speculate for profit. Can you start by explaining what options and futures are?
Absolutely. Options give investors the right, but not the obligation, to buy or sell an asset at a set price before a certain date. There are two main types of options, calls and puts. A call option gives the holder the right to buy an asset, while a put option gives the holder the right to sell an asset. This flexibility allows investors to leverage their positions and manage risk effectively.
That makes sense. Now, what are some common strategies for trading options?
There are several strategies for trading options, including buying calls or puts, selling covered calls, and using spreads and straddles to manage risk and potential returns. Buying calls or puts is a straightforward approach where investors bet on the price movement of an asset. Selling covered calls involves holding the underlying asset while selling call options against it, generating income while potentially capping upside gains. Spreads and straddles are more advanced strategies that involve buying and selling multiple options to limit risk and maximize returns. For instance, a bull call spread involves buying a call option at a lower strike price while selling another call option at a higher strike price, reducing the overall cost of the trade while capping the potential profit. Conversely, a bear put spread involves buying a put option at a higher strike price and selling another put option at a lower strike price, benefiting from a decline in the asset's price while limiting potential losses.
Great. Let's move on to futures contracts. What are futures and how do they work?
Futures contracts are agreements to buy or sell an asset at a future date for a price agreed upon today. They are commonly used for commodities, currencies, and financial instruments. Futures can be used to hedge against price changes or to speculate on price movements. For example, a farmer might use futures to lock in the price of their crop, ensuring they receive a certain amount regardless of market fluctuations. On the other hand, a trader might use futures to bet on the price movement of oil, aiming to profit from price changes. Futures contracts are standardized and traded on exchanges, providing liquidity and transparency. Each contract specifies the quantity and quality of the asset, the delivery date, and the settlement terms. This standardization makes futures an attractive tool for managing risk and speculating in financial markets.
I see. What are the key differences between options and futures?
While both options and futures are derivative instruments, they have key differences. Options provide the right, but not the obligation to transact, whereas futures contracts obligate the parties to execute the transaction at the agreed-upon date and price. This fundamental difference affects how they are used and the risks involved. Options can expire worthless if the market doesn't move in the anticipated direction, limiting potential losses to the premium paid. In contrast, futures involve a binding agreement, which can lead to significant gains or losses depending on market movements. Additionally, options offer more flexibility and can be used in various strategies to hedge or speculate with defined risk, whereas futures are often used for hedging large positions or taking directional bets on market movements.
And what about trading strategies for futures?
Trading futures can involve strategies like going long or short, hedging against price changes, and using leverage to amplify returns. Going long means buying a futures contract to profit from expected price increases, while going short involves selling a futures contract to profit from expected price decreases. Hedging is used by businesses to protect against price volatility, such as airlines hedging fuel costs. Using leverage allows traders to control large positions with a relatively small amount of capital, magnifying both potential gains and losses. For example, a trader might use a futures contract to hedge an investment portfolio against market downturns by taking a short position in a stock index future. If the market declines, the gains from the futures contract can offset the losses in the portfolio.
Finally, let's talk about the risks and rewards associated with trading options and futures.
Both options and futures come with significant risks, including the potential for substantial losses, but they also offer the potential for high returns if used wisely. It's crucial for investors to understand these instruments and their associated risks before trading. Options can expire worthless, resulting in the loss of the premium paid, while futures can lead to large losses if the market moves against the position. However, with proper knowledge and strategy, they can be powerful tools in an investor's arsenal. Managing risk through diversification, position sizing, and stop-loss orders is essential for success in trading options and futures. Additionally, continuous education and staying updated on market trends can help traders make informed decisions and navigate the complexities of these markets.
Now, let's dive into our Stay Connected segment with questions from our listeners. The first one comes from Rachel in Miami, who asks, in the Miami episode, you discussed the impact of emerging financial technologies. How do you see these technologies changing traditional banking services in the next decade?
Great question, Rachel. Emerging financial technologies, such as blockchain and AI, are poised to revolutionize traditional banking services. Blockchain technology can enhance the security and efficiency of transactions, reducing the need for intermediaries and lowering costs. AI, on the other hand, can improve customer service through chatbots and personalized financial advice, as well as enhance risk management by analyzing large datasets to identify potential issues before they escalate. Overall, these technologies will make banking more efficient, secure, and customer-focused.
Our second question comes from John in Chicago, who wonders, what are some of the key investment strategies to consider in a volatile market?
That's an insightful question, John. In a volatile market, diversification is key. Spreading investments across different asset classes, such as stocks, bonds, and real estate, can help manage risk. Additionally, having a long-term investment horizon can help ride out short-term market fluctuations. It's also important to stay informed and adapt to changing market conditions, which can involve rebalancing your portfolio to maintain your desired risk level. Finally, considering investments in defensive sectors, such as utilities and consumer staples, can provide stability during periods of market uncertainty.
Absolutely. And there's another fascinating aspect we touch on in our mixed episode, luxury conceptual digital art. Our digital artworks are not just a feast for the eyes. Each piece is crafted with potential investment value in mind. Inspired by the trajectory of Andy Warhol's iconic prints, which soared in value over time, we anticipate our artworks could similarly appreciate as digital and AI-influenced art gains broader recognition. Warhol's 8 Elvises originally sold for $100,000 in the 1960s and later fetched over $100 million. We hope our art follows a similar trajectory, initially niche but growing in significance as the intersection of technology and luxury art becomes more mainstream.
Indeed, our listeners play a crucial role in this journey. By engaging with our artwork on social media, especially on Twitter where we frequently post updates, our listeners help determine which pieces we feature. The most popular selections by our listeners are initially offered for sale on Etsy. Looking ahead, we're excited to announce plans for the Finance Frontier 2025 Art Collection, a future marketplace where these artworks will be traded like collector's cards. For truly standout pieces, we'll offer exclusive, limited edition artworks as NFTs, showcasing the best of our annual collections.
For our listeners who want to dive deeper and stay ahead with the latest developments, what do you recommend, Max?
I strongly recommend subscribing to our AI Finance 5 newsletter. It's your weekly summary of the top 5 insights from our podcast, crafted to give you a leading edge in AI and finance. Just fill out the contact form linked in our show notes, and every Friday, you'll receive a concise overview of crucial developments directly in your inbox.
Fantastic! And for those who want to continue this discussion and not miss any of our episodes, where should they go?
To ensure you never miss an episode, subscribe to us on Apple Podcasts or Spotify. Your subscription helps us climb the charts and reach more listeners, expanding our community of tech-savvy investors. Plus, it's the best way to stay updated with our latest episodes and the evolving world of AI and finance.
Thank you to everyone who has joined us on this journey. Your curiosity and engagement are what drive us forward. Stay connected, keep exploring, and together, let's uncover the future of technology and finance.
We hope you found today's discussion insightful. As always, our aim is to provide you with the most up-to-date and relevant information in the world of finance and AI. However, please remember that the content discussed in this podcast is for informational purposes only and should not be taken as financial advice. Always conduct your own research or consult with a qualified financial advisor before making any investment decisions.
We would like to acknowledge the sources that contributed to today's episode. The following news articles were referenced:
Yahoo Finance, Reuters, CNN, BBC, CNBC, Sky News, The Washington Post.
We want to thank these sources for their invaluable information that helps us bring you the latest and most accurate news in finance and AI. For more details and the full articles, please check our show notes for links to these sources.